Okay. So guys, I'm Mariam Ali. Okay, so I'm a lecturer in. Guys, am I lagging? No, right? Okay, okay. Please make sure you all check your connection. Sometimes your connection might be not good. That's why it might be like lagging. Just make sure you all check. Okay. Yeah. So we start. Okay, we start. Okay, guys. So my name is Mariam Ali. So I am lecturing advanced level accounting as well as O levels. I'm lecturing commerce, and then as well as I'm lecturing ACCA. Okay, I'm lecturing ACCA financial accounting. Okay, so today we will be I will be teaching you all chapter 4, that is introduction to accounting. Okay, so I will be mainly focusing on the accounting part, which is 70% of your syllabus. Okay, so today we will be doing chapter 4. Okay, so if you have any doubts, you can put it through the chat box and ask me when I'm explaining, when you have any doubts. But please guys, if you are just sending a message, please make sure you avoid it, because I might not get the chance to answer the doubts because of too many messages. Okay, if it is really a doubt, make sure you send it through the chat box. Okay, so the class will be from 2 to 4 p.m. Okay, yeah, 2 to 4 p.m. The class will be from 2 to 4 p.m. So guys, so today will be the first class. So I am going to have a fast track program, which I will be explaining at 2:30. I will explain how this fast track program will be. It will be really good, mainly for grade 11 students, because I will be doing both grade 10 and 11 chapters within 5 months. Yes, no, only chapter 1 is going to be a free session. The others you all have to pay a monthly fees. It's not too much, but we will be finishing within 5 months. We will be finishing all the chapters. I mean, all the accounting chapters. If I was to tell you, chapter 4, chapter 5, 6, 7, that is 8, all the accounting chapters within 5 months. Okay, so the grade 11 students, and this in grade 11, this and this, all the accounting chapters, which is 70% of your syllabus, I will be finishing within 5 months. That is before your O levels. So if anyone who haven't studied anything, I mean, who doesn't know anything related to accounts when it comes to grade 10 and 11, I will be starting from the beginning, which is today is the first class. Okay, so today is a free session. After that, you can pay and join. Okay, so you can just listen to my session, and if you understood and if you feel like it's going to be effective, you all can join that. Okay, so guys, I think we can start now. Okay, I will be telling all the details. I will be telling all the details like at 2:30, 2:45 when everyone is here. I think that's better. If not, I have to repeat it again and again. Okay, okay, so fine, let's start. So guys, we are in chapter 1, the accounting part, chapter 1, introduction to accounting. Okay, so guys, first of all, we are going to study what is accounting. So guys, in this class, there are grade 9 students who are promoted to grade 10 students as well as grade 11. All three, this one are here. Okay, so let's start. Introduction to accounting. Okay, what is accounting? Okay, so first of all, guys, you all should understand at before. Okay, before there was nothing called accounting, because people felt like accounting is just something useless because it's just a waste of money and time. That's how they felt. Why? Because guys, now see, whatever happening in the business, you're just taking a book or something and writing it. Okay, so before, what they felt like, now if you have an accountant, you should pay him a separate salary. So it's a very big cost to the business. So they felt like, okay, what's the use of accounting? Let's not have someone called accountant. But then later, when the businesses became big and big, when it became big, the size was very large. Okay, so it was very hard. It was very hard to manage the business because they didn't know how much cash is there inside the business, how much profit is the business earning. So it was very difficult because the big business, the companies were very big. Okay, so because of that only this accounting emerged. Why? Because accounting is where, guys, you are making sure you're taking all the information, and all the data, and you're converting it to information so that all the users, the parties who are interested in your business, will get the use of it. The parties who are interested in your business will get the use of it. So that's why accounting started. Okay, so now you should know what is called accounting. Accounting, we say it's a process. Why we call it as process? We take all the data from different transactions, whatever happening in the business, we are going to process it and we are going to convert it to information. We are going to convert it to information so that the interested parties, guys, in your business, who are the parties who are interested in your business? Can you all tell examples? Who are the parties? Let's say you're starting a garment factory or a bakery. Who will be interested? Very good. You all are giving answers. That's correct. Customers, competitors, government. Why is government interested in your business? Why should government be interested in your business? Very good. Tax. Government always try to check whether you're earning a lot of profit. Because when you earn profit, government will be the first person coming and asking to pay tax. You understood? So government, customers, why are customers interested? To see whether how much price are you charging? Is it reasonable? So like that, there are so many parties who are interested in our business. So guys, because they are interested in our business, we need to give them information. If not, how will they know about our business? So that's why you are going to do accounting, so that you give information to whom? To the interested parties. You give them information so that they can make decision. For example, now let's take a customer. Okay, so the customer needs information about our business to check whether we are charging a reasonable price. Then what is the decision the customer have to make? Okay, let's say there are two companies, company A and B. Company A is also selling cakes. Company B is also selling cake. Now the customer needs to know whether to buy from company A or company B. So then, guys, the customer will go and check the information given by company A and company B and see, okay, which price is less and reasonable, and then buy the product. So the customer is making a decision. Can a customer make a decision without having information? No, the customer can't make a decision. So because of that only we say accounting, it is a process where it takes in data and convert into information so that the interested parties can make decision. Guys, in accounting or in business studies, we call interested parties as stakeholders. Stakeholders are the parties who are interested in our business. Can you all tell me what is another name we can call? That is another name we can tell. Stakeholders, interested parties. What is the third one? Users. Guys, users is the third name. If you want, you can write it down, guys. Users, stakeholders, or interested parties. Guys, shareholder and stakeholder are not the same. Please don't get confused. Interested parties, stakeholders, users, all three are similar terms. What are they? These are people who are interested in your business, so they get information so that they can make decisions. They can make correct decisions. That's why they need information. Understood? So now you all know what's the definition of accounting. Okay, so make sure now itself you all put it into your head. Don't memorize, understand and study. Then you will never forget. If you start memorizing stuffs, you will forget. Get it? Don't ever memorize. Understand. Now you know what is accounting. It's a process. I told you it's a process. Why? What are you going to do by having that process? You're going to give information. To whom are you going to give? To the interested parties or the stakeholders. Why are you going to give? To make decisions. Clear? To make decisions. Okay? So fine. Now let's continue. So guys, the main objective definition as well as the main objective is the same. Okay, so why do you need accounting? The main purpose of having accounting is so that you give information to interested parties so that they can make decision. Guys, nothing different. Definition, we just said it's a process. So what's the main objective? Why are you having accounting? Why are you preparing all these accounts? Why? So that you can give information to whom? To the interested parties. Why? So that they can make decision. So what can they do by making decision? Guys, by making decision, they can choose what is good and bad for them. What is good and bad for them. Okay, so guys, listen. I have sent you all the tute. If anyone who have joined without having the tute, no worries. After class, put a message to this number. Okay, put a message to this number. I will be sending you all the tute. Okay, for now, just please bear with me. You can see the screen, right? Later, whatever which is not there in the tute, you can just take a book and write it down. Other than that, don't write whatever is in the tune because you will be getting it. Okay, 077-875-9158. Clear? Now, guys, I told you the main objective is providing information so that they can make decision. To whom are you providing? Interested parties. But guys, now we are going to study what are the sub-objectives. Not only that, there can be sub-objectives. But in your exam, if they just use the word, what is the objective? You can't give this. You should first of all give this. Why? Because this is the main thing. This is the main reason we have accounting. Okay, now let's study what is the sub-objectives. To know whether the business has performed well by earning adequate profit. Adequate means sufficient, enough. Okay, so what is the sub-objective, guys? We need to know whether the business is you don't prepare accounts. How will the business know whether they are going to earn profit? Okay, now clear? Now clear? Okay, yeah. Sorry, I got a call. That's why. Yeah, now okay. Fine. Okay, so guys, why do they need why do they need to prepare accounts? They need to prepare accounts so that, guys, so that they know how much profit they can earn. How can they know how much profit they can earn? By preparing a statement called statement of profit or loss. Statement of profit or loss will help us to find how much profit we can earn. Okay, so guys, can you all give me just 1 minute? Some students are calling me and asking to send the link. I'll just send them and then come back. Until that, can you all read what we studied so far? Just give me 1 minute. Okay. Okay, now we can. Okay, so yeah, that is a profit or loss statement of profit or loss. We have that so that we can find how much profit is the business earning. So that is the information you're going to give it to the users so that they can make decisions. And the second one is to know whether the financial position of the business is sound. What does that mean? Guys, now why do we need accounting? So that we see what is the position of the business, what is the position in terms of liability, how much the business have to pay others in terms of assets, how much buildings does the business have, how much machinery does the business have. In terms of assets, liability, equity, we need to know what is the position of the business. Don't worry, we will be studying what is an asset, what is a liability, what is an equity. Okay, just remember, in terms of assets, liability, and equity, how well is the business? Okay. And then the third one, in order to fulfill legal requirements, guys, some businesses, example like companies, you have a must to prepare accounts. You can't say, no, I'm not going to prepare. No, guys, if you are a company, the legal rule is every companies have to prepare accounts. So because to fulfill the legal requirement, you need to prepare accounts. So that is also one objective. So guys, if you don't prepare, your business is like illegal. You're not doing what the law says. You understood? And the other one, to organize financial activities. So guys, by having accounts, guys, you know how much money you need in the future. You know how much money you need in the future, how well are you going to earn in the future. You can organize everything because now you know properly what is going to happen, because you have made information by writing how much money you have now, how much assets you have now. So like that, you can organize all the activities, financial activities. Okay, one student wants me to explain the second point. Guys, second point you might not understand if you're a grade 9 student, I mean, who have never heard the word asset, liability, equity. If I say now, some of y'all might not understand because we will be studying it here. What does that mean is, that means, guys, to know whether the financial position of the business is sound. That means in terms of assets, in terms of liability, in terms of equity, whether the business is, how well is the business performing? Is it good, or whether they are having a lot of assets or whether they are having a lot of liabilities? So that's what the second point says. So when it comes to first point, how can you get this information? By preparing statement of profit or loss. The second statement, how can you get the information? You can get it by preparing statement of financial position. We say statement of financial position. These financial statements, when will we be studying? We will be studying in grade 11, chapter 4 and 5. Financial statements. Okay, so just know there are these financial statements. Okay, so let's continue. Okay, now we are going to study the accounting stakeholders or the interested parties. I told you guys there are three terms: stakeholders, users, interested parties. Who are these people? These people are the ones who are interested in our business. So guys, when it comes to the stakeholders, the parties who are interested in our business, there can be internal and external parties. Okay, internal parties and external parties. Internal parties are the parties who are interested in our business, but they are inside the business. External parties are the parties who are interested in our business, but they are not internal to our business. I mean, they are external, they are outsiders. Okay, so what are the examples? What are the examples? Internal, managers, employees. Who are managers? These are the people who are going to manage the business. They are the one who is going to manage the business. Okay, they are the one who comes every day and then check and then check whether the business is doing well, how much resources the business needs. Yeah, even the owners can come internal. Okay, employees. Now managers say the employees, you should do this, you should not do that. And who are employees? Employees are the people who will listen to the managers. Managers will give them work, employees will do the work. Understood? Managers give work to employees while employees are going to perform that. Good job. Next one, external people. These are outsiders, but they are interested in our business. Yes, even owners can come under internal. Okay, external people, they are interested in our business, but they are not inside. They are outside to the business. Example, investors. Who are investors? Guys, the investors are the people who have invested, who have put money, who have invested in your business. Customers. Who are customers, guys? Customers are the people who will buy your goods. Whatever you sell, they are going to buy it. Competitors, for example, let's say I am having an institute. My competitor will be another institute. So the competitor will be interested in my institute. They will see, okay, how much is she charging? Or how many hours is she doing? So that they can go with me. So that if not, for example, let's say I am charging less than another institute, you all will come to me, right? You will not go to them. So competitors need information so that they know how is the other person doing, so that you can set prices, charge like how much you should charge. You can make decisions. Okay. Oh yes. Next one, financial institution, banks. Why do the bank need information? Guys, let's say you have taken a loan. You went to the bank and took a loan. Do you think bank will just give you a loan? No, bank will say, listen, show me how much assets you have, how much cash you have, how much liability you have. Okay? How much liability you have. Because guys, let's say the bank will always check everything. Why? Because they don't want to just give you money. What if you don't pay them back? So they need information. No, Rayhana, financial institution and future investors are not the same. Okay, investors are the parties who wants to invest in our business or who has invested. Financial institutions, these are the parties who have given money for us. Okay, like external people who have given money, like banks, finance companies. Understood? Okay, so who are investors, guys? Investors are the parties who are going to come and invest in our business. Who have money, they are going to come and invest. Okay, then next one, guys, government. Who is the government? Is the main in a country. There is one person who will be imposing laws and regulation. So they are interested in our business to check whether we are earning profits, whether we are following the rules and regulations. If we are earning profit, they want to charge tax on our profit. So that because government's income is tax. So they are waiting till we earn a profit so that they can charge tax. Okay? Okay. And then suppliers, even you can say suppliers. Even suppliers, you can say suppliers are the parties who are going to give you raw materials. Now you want to buy raw materials, suppliers will give you raw materials. So they are also interested in your business, okay, to check whether you're going to pay them back. Sometimes you buy on credit. You say, listen, supplier, I will buy this raw material and pay you later. And then the supplier won't just give you on credit, right? Supplier wants to know whether you can really pay him. So he will ask you, give me the information for me to believe you. So you have to show the information. Then only supplier will say, okay, I will give you raw material. You can pay money later. Understood? So there are so many interested parties. Okay, so many interested parties who wants to know about our information. Clear? Okay, so is business partners and investors same, guys? When it comes to a partnership, there are different types of businesses. Partnership, the owners, we call it as partners. When it comes to a sole trader, one owner business like grocery stores and all, where the owner is only one person. So they are the person who is running the business. We call him as the owner. Okay, if it is a partnership, we call them partners. Understood? What is SOPL? Is statement of profit or loss. Okay, don't worry, guys. These and all you will study in grade 11. Statement of profit or loss, statement of financial position. Okay. No, investors and suppliers are not the same. Okay, investors are the people who they will come and give money to you. Okay, they will invest in your business. Usually this is there for a company. Okay, company like shareholders. These people will come and give you money and tell you, okay, whenever you earn profit, you have to pay us dividend. Okay, you have to pay us dividend. No, you don't have to pay the investors back. You just have to give them dividend. Okay, so guys, let's continue. Who are shareholders in a company? Okay, because you all are asking these questions, I'll just give a summary, but in the future you will learn better. But because you all are asking, I will just tell you all. Okay, there are different types of business. The first one is, we say, sole proprietor or sole trader. This is where there is only one owner. So you call them as the owner. Okay, when it comes to a partnership, the people who are running the partnership, we call them as partners. Okay, when it comes to a company, the owners of the company, we call them as shareholders. Okay, so when it comes to a sole trader, we call them as owners. When it comes to a partnership, we call them as partners. When it comes to a company, we call them as shareholders. Some students, they get confused with shareholders and stakeholders. Stakeholders are the parties who are interested in a business. There are so many stakeholders. Even a shareholder is a stakeholder, because stakeholders can be customers. So all these are stakeholders. All these are stakeholders of a business. Stakeholders are the parties who are interested in the business. For example, now for me, you're my stakeholder because you're my customer. Students are my stakeholders. Understood? I hope you all are clear. Okay? Shareholders are the owners of the company. Shareholders are the owners of the company. Okay? So now let's continue. Any more doubts? No, right? Next one. Yeah, so what are companies? Companies are when there is so many shareholders, they get together, they start a company. Okay, when it comes to sole trader, guys, there will only be one person who is the main owner who starts the business. When it comes to a partnership, there will be people from 2 to 20. Maximum is 20 partners. But when it comes to a company, it's unlimited. Usually there are two types of companies, but most of the time, guys, there are companies have lot of shareholders. There can be 1 shareholder or 100 shareholder or 1 million shareholders. Okay, so fine. Who are competitors? Competitors are the people who are, for example, let's say we'll take an example. For example, now No Limit. Competitor of No Limit. What is the competitor of No Limit? Can you all give me examples? No Limit is a business. What is No Limit's competitor? Fashion mug. So, okay, so there are so many. Glids. I think Glids are No Limit, same owner. Cool Planet. All these are competitors. House of Fashion. So these people, they do the same business. Odell. They do the same business, so we call them competitors. I hope you understood now. Okay, clear? Now can we go to the next one? Can we go to the next one? Okay, next one, guys. Business transactions. Business transaction. Yes, those who invest, these people, shareholders, when they invest, they get dividend. We should give them dividend when the shareholders come and invest. Okay, yes. Who are future investors? Future investors are the people who are willing to invest, but they haven't invested yet. Dividend means, guys, the income the shareholders get. If they invest in our business, the shareholders, what they get is what you call as a dividend. Clear? Okay. What is the difference between owner and a shareholder? Owner is the coming under sole proprietor. If you have only one person running the business, you call him owner. If it is a company, you call him shareholders. Okay, if it is a company, the people who run the company, we call them shareholders. I mean, who are the owners of a company, we call them shareholders. Dividend is the income shareholders get. Sole proprietor is the owner. If you have one person running the business, you call it as sole proprietor. Okay. Yeah, in a company, you can even have one owner, you can even have 100 owners, you can even have million owners. It is, guys, companies where there is one act, one law. If you go and register to that, you become a company. Even if you are one person, still you can be a company, but you should go and register. Okay, you should go and register so that you become a company. Okay, so now let's go to the next one. Business transaction. Business transaction. Guys, what is a business transaction? Now, guys, I told you accounting is the process. When you see the word process, you would have studied in small age, guys. Process is where even now you would have studied. Data you transfer into information. In every process, you have data. You will transfer this data into information. Like that, guys, even in accounting, the data which you are going to transfer is what you call as transaction and events. Okay, I'll tell you all here. Now, guys, every process have what? There are three parts. One is input. You can write it down if you feel anything is important. Process and output. Output. Okay, when it comes to accounting, what is the input? The input is going to be transactions and events. Transactions and events is what you call as the input of accounting. Input of accounting is what you call as transaction and event. Okay, and then, guys, you will be processing this input and you will be transferring it as output. What is output? Output is the information. We can say financial statement. Financial statements. What are financial statements? These are the information you prepare. Example for financial statement is what I told you all, guys. The profit or loss statement, which you will be studying in grade 11. Okay, profit or loss statement. Examples for financial statement: profit or loss statement, statement of financial position. These are the examples. Okay, so why do you have profit or loss statement? It will give you the profit. It will give you what is the profit you have earned. Okay, profit for the year. Why do you need statement of financial position? It will tell how much are you in terms of assets, in terms of liability, in terms of equity. We say it will identify the financial position of the business. Guys, these are new terms for some students and you might be finding it difficult, but don't worry, guys. Don't worry, you will, okay, don't worry. When you go further and further, we will be doing a lot of questions and all, then you will understand. Okay, so this is the input. You will process it and convert it to output. So inputs are transactions and events. Output is financial statement. Now you have a doubt, what is called the transaction and event? What is called transaction and events. Okay, so yeah, y'all are asking me class details, guys. Please bear with me. After I explain this, I will be telling the class details. Okay. So guys, what is a business transaction? Exchange of resources between a business and other parties. Okay, one student is asking, what about income statement? Guys, profit or loss statement, another name for profit or loss statement is income statement. Both are same. Income statement. Since you are asking, I'm telling it, both are same. Okay, profit or loss statement and income statement are the same. Okay, now let's continue. Okay, what is a transaction? It is where you exchange resource between a business and a other party. Guys, transaction is where there are two people, they are going to exchange resources. Exchange resources. So that means, guys, exchange resources means, for example, let's say I am the business, you're my customers. Now, for example, I am selling stationery. So now you will come and ask me, can I buy a pen? Can I buy a pen? Then I will tell you, please give me 10 rupees. So what I am doing, you are going to give me 10 rupees. Okay, you are going to give me 10 rupees, and then what will I give you? I will be giving you a pen. I will be giving you a pen. So guys, what happened? You are exchanging resources. Whenever you exchange resources, okay, whenever you exchange resources, you call it as a transaction where both parties who are going to exchange resources. In my example which I took, business was me. I am the business. Who is other parties? You, the customers. Customers were the other parties. Understood? So business and other parties, when they exchange resources, you call it as a transaction. Okay. So guys, what is called an event? What is called an event? Event is where, guys, you are now in transaction, both parties are getting the benefit. Am I right? I am giving you a pen and you're giving me money. We both are getting benefit. That's why we call it as a transaction. When it comes to event, guys, when it comes to event, only one party gets the benefit. For example, guys, now let's say I sold you good. I sold you a pen and I asked you to pay me 10 rupees. You told me, Miss, I will pay you later. I will pay you later. But you never came and gave it to me. You never came and gave me that 10 rupees. So then, guys, tell me, is it how many parties got the benefit? Did I get the benefit or only you? Yes, only you got the benefit. One party, you call it as, guys, events. Events is where, guys, example for it is when a customer becomes bad debt. What does that mean? A customer who have to give you money doesn't pay you. When a customer doesn't pay money, who have to give you, you call him as a bad debt. Bad debt. Bad debt is an expense to the business. So this is where only one party got the benefit. Okay. So we say, guys, input of accounting. Accounting input is going to be business transactions and events. Okay. Business transactions and events. Understood? What is bad debt? That's what I told you. Bad debt is where a customer becomes bankrupt or the customer doesn't pay you. Okay, a customer doesn't pay you. So then we say it's an event. Okay, it's an event. So guys, remember, when it comes to accounting input it will have all the transaction and event. Even another example, you can take damaged stock. You bought goods, guys, but the goods damaged due to a flood. You have a loss of goods. But only we are not getting the benefit, right? We bought the stock, but it fully damaged due to flood. So that is also an event. Okay, we can even say goods damage due to flood. Understood? Okay, natural disasters which happen, or let's say an employee comes and steals the money. It's a cash loss. We are losing our cash. So that is also an event where we don't get the benefit, but still we have to record. Still, we have to record. I hope now you all are clear what is called a transaction and event. What is the meaning of bankrupt? Bankrupt is where your customer doesn't have money to pay. Maybe he is a businessman and he fully lost his money or whatever. He has no ability to pay, or maybe that is what you call as bankrupt. So one situation you can have a bad debt is where your customer becomes bankrupt. So he doesn't have money to pay you. Or maybe you can still become a bad debt. You can have a bad debt from customer where your customer dies. When your customer dies, can he pay? No, he can't. Okay, so that is also a bad debt. Yes, okay. Debt is the amount they have to pay you, customer. Understood? So guys, now before I go to the next part, since you all are asking about the class information, I'll just let you all know. Okay, so guys, this is going to be a fast track program. Okay, this is going to be a fast track program. The first chapter which I'm teaching today will be free session for all. Okay, but starting from chapter 2, you all have to pay. Okay, so the monthly fees will be 2,200 per month. It's a fast track program where, guys, in 1 week, most of the time, okay, most of the time we will be having wait, I'll explain here so that you all don't get confused. Wait. Okay, so guys, this is a fast track program. That means, guys, we are going to do within 5 months. That is before your O-levels. Okay, before your O-levels, we are going to do the fees is 1,200, not 2,200. 1,200 per month. And guys, the fixed time is 2 hours per week. The same time we have now, 2 hours per week. But guys, I will be increasing it in the future. Because we have to finish the syllabus. It will be, guys, Wednesday, same time, 2 p.m. to 4 p.m. 2 p.m. to 4 p.m. Okay. And guys, I will make sure that I will be finishing the syllabus grade 10 and grade 11 before your exam. Okay. That is your O-levels, before your O-levels. Yeah, this is mostly suitable for grade 11s. But still, even grade 10s can join, because this is my batch 4. I am doing like this, and this is my batch 4. Okay, the 4th batch I am doing like this. If you want, you can ask my previous batch students. I have done this like this. Okay, so in this, guys, after that, I will be finishing it before your exams. Before your O-level exams, and then after that, in April, I will be starting batch 5. Okay, I usually do fast tracks when it comes to O-levels, because I feel like you studying O-levels business studies within 2 years. That is a waste of money. That's the main reason I am doing fast track, so that the students can pay less and get the syllabus fully done. Okay. So guys, you will ask me now, what are the chapters I'm going to teach? Only accounting chapters. Only accounting chapters. I'll show you all what are. It is actually 70% of your syllabus. Okay, whichever I have marked, these are accounting chapters. So that means, guys, the other chapters you have to study by yourself. The business studies chapters. Okay. The business studies chapters you have to study by yourself. That is this 3. Guys, this is grade 11. Okay. And this is grade 10. So guys, in grade 10, the first 3 chapters you have to study by yourself. In grade 11, the first 3 chapters and the last chapter you have to study by yourself. The other 70% of your syllabus is accounting. 70% of your syllabus is accounting. Okay. For guys, the theory you can self-study. You don't have to join a class for theory. Okay, that's why I'm not doing it, because you all can self-study. Okay, so the accounting chapters only students find it difficult. So that's why I am keeping this fast track program. Clear? So guys, I will be completing your book fully, except these chapters. Okay, if you want to join, you can let me know. Okay, so I hope now you all are clear. So this batch this batch is, today is the first day, batch 4. Today will be the first day. Okay, if you are a grade 9 student who is promoted to grade 10, guys, you all can join April, which will be the batch 5. You can join April. Okay, so except which chapters, I'll just show you all, guys. Except the first 3 chapters of grade 10, which is business studies, and the first 3 chapters of grade 11, which is business studies, and the last chapter. Guys, I am always doing fast track programs. Okay, I'm doing fast track programs. Actually, I don't do separately grade 10 separately, grade 11 separately. Yes, before February 20th, I will be finishing. I will be sending tunes for each chapter. Oh, okay. And yeah, the theory part. Okay, these are theory chapters. I mean, these chapters which I will be doing. Yeah, the questions every chapter, after the end of the chapter, I will be doing questions related to that. I will be doing, guys. I am not just going to teach the theory only. Okay, I will be doing the questions related to each chapters. I hope you all are clear. Now, can we continue? Okay, the number, guys, the number I will write here the number if you all want. Okay, 077-875-9158. Okay. About the paper class, guys, if you all I will be updating it in my status, guys. Most of y'all have given me the number, right? So I mean, y'all have sent a message. So I will be updating in my status about the paper class, which it will be starting next month. Okay, so y'all, if you all want, you can join that. Yeah, you can for this month, because this is half month, guys. You can pay on. You should pay only rupees 600 for this month, because this is half. Okay, and then from next month you should pay 1,200. Okay, and yeah, I will be sending recordings after every chapter. I mean, after every class, guys, recordings are provided. I hope now you all are clear. Okay, recordings are provided after every chapter. Paper class, guys, I will be updating how much is the fee. I haven't decided or anything. I will be updating. I will let you know. I have planned to do something, guys. I will let you all know. Okay. Okay, guys. I think if you want, just take a screenshot, or I will. Okay. We will continue, because we have to finish it off. Okay, guys. Now let's start. Now, guys. What is 600 for? 600 is for the month of, if you are joining this fast track program, guys, for the month of September, it's only 600, because it's half month. Understood? And then from October, you can pay 1,200. Understood? If you really want to join, you can put me a message. Okay, you can put me a message through WhatsApp. I will help you. Okay. So, guys, let's continue. Guys, what are the accounting elements? Now, you all should know accounting elements. This is very important. Okay, guys, there are 5 accounting elements. Okay, these elements, without these elements, you can't do accounting, because everything is related to these 5 elements. What are they? Assets. Okay, assets, liability, equity, income, and expense. So, guys, you should know what is the definition. What does asset means? What does liability means? What does equity means? What does income means? You should know the definition. Not only that, guys, you should know examples. You don't have to memorize. If you understood the definition, guys, you can automatically, whenever someone gives you an example, guys, you can automatically find whether it's an asset, liability, income, or expense. So guys, even I have prepared a short note where I have included most of the examples for assets, liabilities, equity, income, expense. You all can go through that later. Okay. So guys, now let's go to what is an asset. Okay. Guys, asset, it is a resource controlled by the business. We say, guys, it's a resource. Okay, it's a resource which the business is controlling it. Okay, that means the business can make changes. The business can do some certain changes. They have the control. Okay, they have the control over it. Okay, and it is as a result of a past transaction and event. For example, guys, let's say yesterday you went to the shop, you went and bought a motor vehicle. You went to the shop and bought a motor vehicle, guys. So, guys, you went yesterday and bought a motor vehicle. Okay, so that is, guys, now tell me, after you buy this motor vehicle, can you control this motor vehicle? Can you control? Yes or no? You went and bought the motor vehicle. Can you control it? Yes, you can control the motor vehicle because you bought it. Okay, so guys, you can't say owned. You can't use the word owned. When they ask you the definition of assets, you can't say owned. We say control. Because, guys, you will study in the higher studies. There are certain assets, even though you don't own it, still it's an asset because you have control. You have a control over the asset. Guys, we say that's why we use the word control. So please be careful when they ask you the definition of assets. Don't use the word owned. We say, guys, asset is a resource controlled by the business. We can control the resource. For example, now you went yesterday and bought the motor vehicle. Okay, guys, I am not done explaining what is an asset. Please be patient. Okay, so guys, we have the control over the asset. Yesterday, we went and bought the motor vehicle. Let's say you went and paid 10 million, example, and you bought a motor vehicle. Okay, so guys, after you buy the motor vehicle, you know you have the control. That means you can paint the motor vehicle or you can break it. It's up to you because you bought it. You have the control over the motor vehicle. As a result of a past transaction. Guys, was it a past transaction? Did it happen before? Or is it future? Did you buy the motor vehicle in the past or in the future? It's in the past. It's in the past. So we say, guys, the asset is a resource controlled by the business as a result of a past transaction and event. Because we went and bought it yesterday, it is because of a past transaction. Okay, and guys, from which future economic benefits are expected to flow. Guys, let's say by using this motor vehicle, you're planning to sell your goods. You're planning to sell your goods, guys. You're planning to sell your goods by using this motor vehicle. Tell me, guys, are you going to get benefits in the future? If you use this motor vehicle, are you going to get benefits in the future? Yes, you're going to get benefits in the future. So we say it is a resource controlled by the business as a result of past transaction and event. Okay, and from which you're going to get future benefits. And in the future, guys, you're going to get benefits. It is going to come inside the business. Okay, we are going to get benefit maybe by using, guys, not by selling this motor vehicle. We are not talking about that. We are telling by using this motor vehicle in the future, we will get benefits where we will have inflows. We will get inside the business. Understood the definition of asset? We say asset is a resource. We have a control over it. We have the control over it. Why do we have the control? Because I went and bought it yesterday. I went and bought it yesterday. Today I have the control. And I know, guys, if I use it in the future, I am going to get benefits by using it. By using the asset, guys, I know in the future, I am going to get economic benefits. Okay, so we call this as an asset. Now, guys, see this example. For example, you in 1st of January, you went and bought a machine. Okay, we went and bought a machine for 40,000. That is a past transaction. That is a past transaction. Last year, you went and bought a machine for 40,000. Okay, and then, guys, because you bought the machine last year, now you can control the machine. You have the control. And you know, guys, in the future, you can sell the goods you manufacture from this machine. You use this machine to manufacture, right? You use this machine to manufacture. So by manufacture goods, by manufacturing goods, you know, in the future, you can earn an income. You can earn income. For example, let's say, guys, you went and bought a printer. You went and bought a printer last year. 1st of January, now it's 1st of January 2020. Last year, you went and bought a machine. Now, guys, because you went and bought last year, you know this printer, I can change the way I want. I can include more softwares or whatever. I can change it. I have the control. And when you know in the future, if I use this printer and print papers, and we can earn income, we can start a printing business and we can earn benefits through that. So we can say printer is an asset. Are y'all clear? Are y'all clear? So what are the important 3 points? Control by the business as a result of a past transaction, and you will get future benefits. These are the 3 things you should know when you hear the word asset. Risk control, now itself put it in your head. Control by the business as a result of a past transaction, and from which you will get future benefits. You will get future benefits. So you should always remember these 3 terms. 1, 2, 3. Okay, don't ever forget this. Now, guys, assets. You can divide assets into 2 parts: non-current assets and current assets. Okay, there are 2 types of assets. What are they? Current assets and non-current assets. Guys, I will not be giving a break. We will be finishing the class at 4, guys, because I have to try my best to finish this chapter. Understood? Okay, so guys, assets, you have 2 types of assets: non-current asset and current asset. What are non-current assets? Guys, these are assets which will generate future benefits for more than 1 year. Guys, by using this, guys, you're not going to get benefit just for 5 months or 3 months. By using these assets, you're going to get benefits for more than 1 year. 1 financial year means, guys, more than 12 months. By using this asset, you will get benefits for more than 12 months. Can you all give me examples? When you use something, you will get benefits for more than 12 months. Can you all give me examples? Think about the practical situations and give me. Very good, very good. Land, building, machinery, furniture, motor vehicles. Guys, these are assets where you can use it. Equipment, fixtures. Guys, you can use them and get benefits for more than 1 year. Okay, not cash, not stock. Cash and stock is a current asset. Okay, when you can use an asset and if it gives benefits for more than 1 year, you call it as a non-current asset. What are the examples? Land. Okay, land. Now see, guys, you have a land. you can use this land. Will you dispose the land within 2-3 months? No, you are going to use it for more than 1 year, 10 years, 20 years. Okay, so then another one, building. You can use the building, guys. You can, if you have building, you can rent it out and get rent income. You can get rent income by having a building. Machinery, by having machines, guys, you can produce goods. You can produce goods where you can earn for more than 1 year. Motor vehicle, by having vehicles, guys, you can sell your goods through the vehicles. You can send your goods to customers through the vehicle. You can get benefits for more than 1 year. You're not going to use it only for 5-4 months. You can use it for more than 1 year. Understood. Next one, furniture and fittings. Furniture, tables, chairs, guys, you can use it for 1 year, more than 1 year. Fittings, which you have in businesses and all, there are fittings they put, that is also used more than 1 year. Equipment, what are equipment? Equipment, guys, equipment is a laptops, computers, you call them an equipment. You can use it more than 1 year, right? So we call it as non-current asset. Now remember, what is a non-current asset? Non-current assets, these are assets which will give benefits, for more than 1 financial year. Guys, don't tell the stuffs which you have in your home. You are a business. Now you're doing a business. Always think you're the business person. You're not in the house. You're having your own business. Okay, some of you are telling TVs, books. Guys, no, guys, you're in a business and you're an accountant. So in that perspective, guys, you can find non-current assets. Clear? Machines and all those. What is fixed deposit? Listen carefully. What's a fixed deposit? Guys, fixed deposit is where you have money. You have money, you go to the bank, and guys, the bank will open. Bank will give you a fixed deposit account. Fixed deposit is usually more than 1 year. Now you have extra money. So what you think is, why am I just keeping money in my hand? Why don't I go and invest somewhere? Why don't I put this money in the bank? Then the bank will pay me interest, which that's the benefit I'm going to get in the future. Interest income. Me going and investing in the bank, I am going to get interest income. You get it? So that's why we say, guys, you go and you have extra money and you go and invest, guys, you're going to get interest income. So fixed deposit is a non-current asset. Okay, so this is where, guys, they have a maturity period where you can only get the money maybe after 1 year. Maybe after 1 year only, you will be able to get this money. So that's why we say we get benefit for more than 1 year. What's the benefit we get by having a fixed deposit account? Interest income. Okay, and then, guys, next one. What is the benefit we get by banks giving us interest income? Guys, we are getting cash, right? We are getting cash. Next one, guys, investment. Investment is where, guys, you have money, you have extra money. You're a business, but you're going and investing in another business. Now, let's say you have a lot of money. You're doing a business. Your business name is A. You have a lot of money, you go to business B and you go and invest in company B. So when you go and invest in company B, let's say you buy their shares. Now this is a company, no? So you have shares. Shares is how you become a shareholder. The owner of a company is what you call as shareholder. I explain here. So you go and buy shares. Guys, when you go and buy shares, tell me what is the benefit you will get in the future? What is the benefit you're going to get in the future by investing in company B? What is the income you're going to get? I explained this. What is the income you're going to get by investing in company B? Very good. Guys, you all know, if you become a shareholder in a company, what do you get? Dividend income. You get dividend income. The future benefit you're going to get by investing in another company is called dividend income. So you have extra money, you went to company B and bought their shares. So you became a shareholder. When you become a shareholder, you will get dividend in the future. Whenever the company earns profit, you are going to get dividend. So that's why we say it is a non-current asset, because by investing in another company shares, you are going to get dividend income in the future. So we can say investments are non-current asset. Okay, simple. You have extra money, you go and invest in another company. You invest somewhere. When you go and invest, you will get income. This is just an example I told. Understood? There are different types of investments you can make where you can get future income. So we call it as a non-current asset. We call it as what? A non-current asset. Now let's study what is a current asset. Guys, current asset. Now, non-current asset, we say it's long-term assets. Long-term, it gives you benefit for a long period. Now, current assets, you call it as short-term assets. Short-term assets, guys, this will give you benefit for a period less than or within 1 financial year. Now, tell me what's 1 financial year? 1 financial year have how many months? Quickly answer. 1 financial year have how many months? Very good. 1 financial year have 12 months. So guys, 1 financial year have 12 months. If you have an asset and that asset gives you benefits for the less than or within 12 months, you call it as a current asset. A current asset. Okay. Now, can you all quickly go through this, whatever I explained so far? Just read it. I'll explain the examples within after 1 minute. Just quickly go through, see whether you can understand. And if you have doubts, you can ask me. Okay. Okay, wait, I'll answer your doubts. More than 1 financial year means more than 12 months, more than 1 year. Okay. Inflow to the business means you are getting inside. Guys, okay, what is trade receivable? Guys, I haven't explained that. Please be patient. Okay, next one. What is dividend, guys? Dividend is when if you are having a company and if you go and invest it. Okay, if you go and invest in another company shares, you get dividend. It's an income you get. Okay, just give me 1 minute. Okay, guys, now see, I haven't explained these examples. You're asking me what is this? What is this? Guys, I haven't explained this. So now I will be explaining it. Okay, now I will be explaining it. Listen. Okay, so what is fixed deposit? Some of y'all want me to explain what is fixed deposit, guys. Fixed deposit is where you have money. You have extra money. You go to the bank and open an account. That account is called fixed deposit account. When you open a fixed deposit account, you have to give them money. They will give you a certificate. Okay, they will give you a certificate. This is called the fixed deposit certificate. And then, guys, you will get interest income. You will get interest income. So by investing, listen carefully, by going, you have extra money, you go to the bank, okay? You go to the bank and invest this money, okay? And then when you go and invest this money in the bank is going to give you a certificate. You call it as the fixed deposit certificate, okay? So then, guys, this fixed deposit certificate you will get, and every month, now this is the bank, okay? Every month, bank, you're the business. You're the business. Always when it comes to this subject, guys, always assume you're the business. You're the business, okay? Don't think you're the customer. Don't think you're the competitor. You should always think you're the business, okay? So, guys, you're the business. You have money. You go to bank and say, I want to open a fixed deposit account. Bank will tell, give money. You give money to the bank. You give money to the bank. Okay, so when you give money to the bank will give you interest every month or maybe annually. The bank is going to give you interest income. This interest income is the future benefits you are going to get. That's why we say fixed deposit is an asset, a non-current asset, because you're going to get benefits for more than 1 year. Okay, understood? So, guys, that's how it is. Guys, when it comes to a company, guys, if you want to become an owner of a company, you should buy shares. Some of you all were asking, what is shares? If you want to become an owner of a company, you have to buy shares. That is it's like a unit, like a unit. If you want to become an owner, you have to buy shares. The higher the shares, higher the ownership you get. If you buy shares, guys, every time when the company is earning profit, you will get dividend. How to buy shares? Guys, you will study in the higher studies how to buy shares. You have to go to there is a website you can buy shares. Okay, so, guys, yeah, even in max and all you might have studied. Okay, guys, now we'll go to examples of current asset. Current asset is where, guys, you will get benefits for less than 1 year, or we say within 1 financial year. That's going to be 12 months or less. Okay, examples. What are stocks? Now, let's say, guys, stock is going to differ. It's very subjective from business by business. Okay. Now, let's say I am selling furnitures. You are starting a business. You all have started a business to sell books. What is your stock? What is your stock? Books. Understood? My stock is furniture, your stock is books. Okay, for example, another person have started business to sell pens. What is the stock of that business? Pens. Understood? So what is a stock? Why did you start the business? To sell these stocks. Okay, now these stocks are not yet sold. It's there to sell. So, guys, you will get benefits in the future by selling these stocks. In the future, you're going to get benefits by selling these stocks. That's why we say it's a current asset, because you keep, guys, let's say you have started a business to sell pens. Will you keep this pen for more than 1 year, or will you sell it within 1 year? Tell me, will you sell this pen within 1 year or more than 1 year? Normal situation. Guys, normal situation, you will sell this pen within 1 month, within 2 days, 3 days, you will try your best to sell because you started the business to sell pens. So obviously you will sell as fast as possible. That's why we say stock is a current asset, because it will give benefits within 1 financial year. Another word for stock is goods. Both are same. Goods. We say goods. Okay, both have the same meaning. Now, guys, next one, trade receivable. Another word, if you want, write it down, guys. Another word for trade receivable is debtor. Debtor. We call it as debtor. D-E-B-T-O-R-S. You don't say debtors, you say debtors. Debtors. D is silent. Okay. Who are trade receivable? Guys, trade receivable is where you have sold goods to customers. You have sold goods to customers. Let's say I'm selling pens. I'm selling pens. I have sold pens to y'all. I have sold pens to y'all. And guys, now what is happening? You have to pay me money for this pen. You say you will pay me later. You say you will pay me later. For me, y'all are debtors. For me, y'all are trade receivable. Because guys, I have sold it, but I haven't got the money yet. So will I get it in the future? Yes, I will get it in the future, but it will not go more than 1 year. I will tell you, listen, I have sold the pens, but I need the money within next month. I can't wait. So guys, y'all are my debtors. Y'all are my debtors. Okay. So this is where how does the debtor is created, guys? Debtor is created when you have sold goods on credit. Okay. If you want, guys, you can write it down, guys. Debtor. How is debtor created? Debtor is created when the business sells goods on credit. On credit means you say, okay, I will give the goods now. You can pay me later. That's what on credit means. No. Loans and debtors are not the same. Okay. You think you're the business. You're the business. You have sell goods to whom? You have sold goods, guys. When the business sell goods to customers on credit. You are selling goods to customers on credit. You call them as debtors. That means you're not asking money now. The customer is telling, listen, I will pay you later. So guys, you will get the benefit in the future. That's why you call it as an asset. Debtor, or the other word for debtor is, guys, trade receivable. Both are same. Trade receivable. I hope you all are clear. This is where you have sold goods on credit. For whom have you sold? For the customers. So that customers will give you the money later. Clear? Class we will finish the class at 4 o'clock. Okay. So guys, now let's go to the next one. Prepayments. Guys, if you don't listen carefully, you will not understand what is this. Okay. So please listen carefully. What is prepayment? Let's say, guys, you have to pay electricity. Okay. If you have to pay electricity every month you have to pay electricity, say monthly electricity is going to be 1,000 rupees. Now tell me, guys, electricity is an expense to you or not? You have a business. Now you have incurred electricity. Is it an expense or not? It's an expense. It's an expense for us. Now tell me, how much should you pay for 12 months? For 1 month you have to pay. For 1 month you have to pay 1,000 means, guys, for 12 months, how much you should pay electricity? 12,000. You have to pay for 12 months. 12 into 1,000. You have to pay 12,000 for 1 year. For 1 year, you have to pay 12,000. Let's say, guys, you have to pay how much? You have to pay 12,000. But you have paid 14,000. 14,000. Now tell me, have you paid extra or have you paid less? Have you paid more or less? Yes, you have paid extra. Guys, if you have paid extra, tell me for the next year, this extra 2,000 you paid. Extra 2,000, you have paid extra how much? You have paid extra 2,000. This 2,000 extra you paid, should you pay again in the next year? Should you pay again in the next year? No, right? You have already paid. But will you get the electricity service? Will you get the electricity service? You don't have to pay, but will you get the electricity service? Yes, you're going to get it. So we say this 2,000 is a prepayment. Why prepayment? Because guys, you have paid in advance. You have paid now itself for the next year. For the next year, you have paid 2,000 now itself. We call it as prepayment. Guys, this 2,000 is prepayment. In the future, you don't have to pay this 2,000, but still you will get the benefit. You will still use the electricity. That's why we call this as current asset. Current asset. Clear? You will get the benefit, but you don't have to pay because you already paid this year. Yes, it's just like prepaid phone bills and all, where you pay extra at the first itself. So that means next year you pay this year itself. So it's going to be an asset, because in the future you will get electricity services without paying that 2,000. Clear? Next one. Now some of y'all were asking me if fixed deposit and cash at bank the same. No guys, cash at bank is where you have money in your current account. There are different types of accounts a bank can give you. One is fixed deposit account, current account, savings account. Now guys, when you have money in the current account, we call it as cash at bank. Cash at bank. This is where you have opened a current account for your business and you have put money in your current account. You call this as cash at bank. Clear? It's an asset for us. You know why? Because whenever we want, why do we say it's a short-term asset? Why do we say it's a current asset? Because guys, whenever we want, we can go and take it, right? Now, today, if I need money, I go to my bank and ask my money because that's my money. You understood? But fixed deposit, you can't do that. Fixed deposit, you can't do that. It's an agreement. You say you and the bank have come to an agreement where they give you a certificate and they tell you, okay, after 1 year only, we will give you the money. It's a certificate. After 1 year only, you will get the money. Understood? So guys, you understand the difference? Now, cash at bank, okay? Cash at bank is where you have money in your current account. Whenever you want, you can go and take it. That's why we say it's short term. Cash in hand is, guys, you have money in your hand. When you have money in your hand, we call it as cash in hand. So, but whenever you have money in your hand, you can use it, right? That's why we say it's an asset. That's why we say it's an asset. Okay, guys, we will try to finish up to liability even. That's enough. Okay, we'll try to finish liability. I'll try to take, okay, I will try to take another class to finish the other part. Okay, I'll let you all know. Next one, guys, liabilities. Liability is the second element. As you all should know, why do you need to know this? So that when they give you an example, you need to, without memorizing, when they give an example, you should be able to find whether it's an asset, liability, income, or expense, or equity. Okay, please don't memorize. If you memorize, you're going to forget. Okay, just understand the definition, understand how do we identify, then you will easily get the answer. Clear? Now let's go to liability. Now let's say, guys, you are the business. Always think you're the business. Okay. Now what happens is you are the business and someone comes and asks you, no, you need money. Okay, you need money. You have started a business, guys. You don't have money. Okay, you need money. So you need money, right? So what you do is you go to the bank and ask for a loan. Now here, guys, you go to the bank You go to the bank and say, listen, bank, I need money. You're the business. Okay. You're the business. You go to the bank, you went to the bank yesterday and you asked for money. Let's say you asked 1 million from the bank. So bank will check, okay, whether this person will be able to pay in the future. The bank is not just going to give you money. They will check, okay, whether you can pay in the future, and then the bank is going to give you money. Now tell me, after the bank gives you money, do you have an obligation to pay them back? Today, let's say you went and took the money yesterday. You went to the bank and took the money yesterday. Tell me, guys, today, do you have an obligation? Today, do you have an obligation that you have to pay them? Is there in your head, will you have in your head, okay, I have to pay to the bank 1 million, I have to pay? Yes, guys, you have an obligation. Obligation is where you can't go against. It's your duty. It's your duty. You have to pay to the bank this 1 million. So we say, guys, liability is a present obligation. Today you have an obligation. Today you have. Why do you have it today? Because yesterday you went and took a loan. Result of a past transaction. Because you went and took a loan yesterday, today you have an obligation, and which requires an outflow of economic benefits when settlement is made. Guys, I'll repeat it again. Yesterday you went and took a loan from the bank. Because of that, today, yesterday you took the loan. No? So as a result of past transaction, because you took a loan yesterday, today you have an obligation, present obligation. Because you have an obligation today, guys, you know you have to pay the money in the future. When you pay the money in the future, what happens to your economic benefits? What happens to your economic benefits? Will it go out or will it come in? Will it go out or will it come in? It goes out in the future. You have to pay the money, guys. When you pay the money in the future, you know your benefits goes out. Your benefits goes out. See, they are telling now you have an obligation. Guys, I didn't tell you you should pay now. I told you have an obligation today. But you know, in the future, when you're settling the money, you know your benefits will go out because you have to give your cash. You have to pay in the future. When you pay in the future, your benefits goes out. So we say this is what a liability means. Now put it in your head, guys. It's a present obligation because you went and took a loan yesterday as a result of a past transaction and event. And because when you settle this in the future, you're going to have an outflow of economic benefits. Clear? Not difficult, right? Not difficult. Understand it, then you will find it easy. Okay. Now, guys, see this example. Let's say now it's 1st of January 2020. Last year, you went and took a loan from the bank. How much did you take? 100,000. Because you went and took last year, it's a past transaction. It's a past transaction. And you know, because you took it last year, you know, now you have an obligation. Today you have an obligation you have to pay in the future. Okay. And then you know next year when you pay, you have to pay next year. You example, okay, this is just an example. It depends on the loan agreement. Let's say you have to pay next year. You know, when you pay next year, your economic benefits goes out. Your economic. Now one student is asking, what's an economic benefit? Guys, economic benefit means your resources. Your resources inside the business goes out. Example, let's say I have to pay you 1,000 rupees. I took 1,000 from one of the student. I took 1,000 from one of the student. I have to pay you. I tell you, listen, I will pay you tomorrow. Okay. So tomorrow I have to pay you. So tomorrow what happens is, let's say the next day I cannot pay. I don't have cash. So I tell the student, listen, I told you I will pay tomorrow, but I don't have money now. What? I have a new bag. Shall I give my bag instead of giving you money? Still, guys, is my resource going out? Yes or no? Is my resource going out? Yes or no? Yes. It money. It doesn't have to be money. Anything which is going out of me because I have to settle the loan, I have to give my student 1,000. So I tell my student, listen, I'm not going to give you cash. Shall I give you my bag, which is new? So that is also worth 1,000. So then when I give, my resource goes outside. So guys, we say liability is a present obligation as a result of a past transaction. And you know, when you settle it in the future, your economic benefit will go out. So that's why we say it's a liability. Same like assets, guys. Liability also divided into two: non-current liability and current liability. Okay, so guys, yeah, it doesn't need to be money. It can be anything which is a resource. That means anything which is owned by the business, it's going to go out when settling. Okay, so that's why we don't say, if not, we can say here, no. If not, in the definition, we can say outflow of money. Why don't we say outflow of money? Because it doesn't have to be money. It can be any resource owned by the business. Understood? Okay. Now let's go to next one. Liabilities are divided into two: non-current liability and current liability. Non-current and current. Okay. So what is a non-current liability? Non-current liability, these are long-term loans. Long-term loans. Current liability, short-term loans. Okay, what is a non-current liability? Liabilities which will take more than one financial year to make the settlement. Okay, when you can set these liabilities, you can settle. You will take more than 1 year to settle it. Usually, the most common example is bank loan. Now, you went and took a loan from the bank, right? You went and took a loan from the bank, 1 million. Bank says, listen, you have to pay this 1 million within 3 years. So guys, when you make this settlement, it is going to take more than 1 year. It's going to take more than 1 year. So we call it as non-current liability. When the liability, it takes more than one financial year to make the settlement, you call it as non-current liability. What is a current liability? Short-term loans. These are liabilities which is going to take less than or within 1 year to make the settlement. When you have to settle it, it is going to take less than or within 1 year. Okay, so 1 year is 12 months. For example, trade creditors. You all were asking me what is trade creditors. Guys, I explained all what is trade debtors. Trade debtors is where, guys, you have sold goods on credit to customers. Customers have to pay you later. Now, guys, trade debtor. You say, guys, trade payable, or you say creditor. Another word, creditor. Who are they? Guys, these are people, guys, you have bought. This is when the business purchased. When the business purchased goods. From whom? From whom do they buy goods? Inventory, raw materials. From whom they buy raw materials? Yes, from whom? From whom does the business buy raw materials? Suppliers. Very good. Suppliers. Guys, you buy raw material from suppliers. You call them suppliers. When you go and buy goods from suppliers on credit. Let's say, guys, we are selling pens. To sell pens, what do? We go and buy pens from someone else, from a supplier. A supplier of pen, you go and buy and sell it to customers. So now you go to this supplier and say, listen, supplier, I need 1 million pens from you. I want to buy 1 million pens, but I can't pay you now. I don't have money now. I'll pay you later. So I am the business. I go and buy goods from suppliers on credit. Credit means, guys, pay later. I'll pay later. Understood? What is trade debtor? Trade debtor is where the business sells goods to customers and they will pay you later. That's why we say it's an asset, because in the future we will get benefits. When they come and give the money, we will get benefits. So we call this as current asset. But trade creditor, now who should pay in the future? When it comes to trade creditor, business have to pay. Before, customers had to pay us. Trade creditor is where, guys, we say it's a current liability, because who have to pay now? Business have to pay. We have an obligation. We are liable. We are liable to pay to the supplier. So we call them as trade creditor or trade payable. This is where the business has purchased goods from suppliers on credit. It's a current liability. It's a current liability. Understood? Now, next one, bank overdraft. Now, guys, you know, when you have cash in bank, cash at bank. What is cash at bank? Okay, I'll write it here if you all want. Guys, cash at bank is a current asset. I explained you. Cash at bank is what? It is where when the business have money in where? In the current account. Current account of the bank. Bank will have a current account. Guys, you have money in your current account. What is bank overdraft? There is another word, guys, bank overdraft. Now, bank overdraft is where you are having a negative balance. You are having a negative bank balance. When you have a positive bank balance, that means who should give money? Business have, the bank should give us money because we have the money in the bank. Okay, so we say this is a positive bank balance. When there is a positive bank balance, what do we call this? We call this cash at bank. It is what? It is a current asset. Current asset. But guys, let's say you have taken too much money from the bank. You have taken too much money from the bank. If you have taken too much money from the bank, for example, in your bank, let's say you have only 10,000 rupees, but you have issued checks. You have given checks for 12,000. You have taken more than what you have. You call it as bank overdraft. Okay, so bank overdraft is a situation where you have a negative bank balance. This is where when the business issues checks for value more than the, wait, I'll explain, okay, more than the existing bank balance. You call it as, it's a negative bank balance. When there is a negative bank balance, what do you call this? You call this a bank overdraft. Bank overdraft. Guys, bank overdraft is a current liability. Guys, these are new terms you all are studying. Some of you all are hearing it for the first day. Don't worry, guys. When you go further and further, this is going to be used frequently. You're going to get used to it. At first, guys, these words is going to be difficult for you. But when you keep on learning, it's not going to be difficult. Okay, I'm just telling for the students who are learning this for the first time. What is a cash at bank? This is where you have money in the current account. This is a positive bank balance. We say it's a current asset. Bank overdraft is where, guys, you have issued checks for more than the existing balance. You have issued checks, guys. Let's say you have money. Okay, let's say in the bank, guys, you have only 10,000. But you're issuing checks for 12,000. You're paying someone for 12,000. So in that case, what happens to your bank balance? Your bank balance becomes negative. When your bank balance become negative, what do you call this? Bank overdraft. Bank overdraft. Okay, you call this what? You call this bank overdraft. It's a liability. Why? Because you know in the future you have to pay the bank this 2,000 because you had only 10,000. Okay, but you issued checks for 12,000. You had paid someone for 12,000 from the bank. So now you know you are liable to the bank. You have to pay to the bank in the future 2,000 because you issued checks more than the existing balance. Clear? Cash at bank is where, let's say, when you see the bank account, you have 10,000 rupees. You call this as cash at bank. You have money, positive money. This is positive, no? This is situation 1. Situation 2 is, guys, you have 10,000 rupees, but you issue checks. You pay a creditor. You pay someone. How much? 12,000. Now what happens to your bank balance? Your bank balance becomes negative. When the bank balance is negative, tell me, guys, who should pay whom? Should the business pay the bank or the bank should pay the business? Should the business pay the bank or bank should pay the business? Very good. Guys, when there is a negative balance, business have to pay the bank. Okay, business should pay bank. When you have a positive bank balance, who should pay him? Who should pay whom when we have a positive bank balance? Very good. Bank should pay the business. Bank should pay business when you have what balance? A positive balance. So that's why when the bank have to pay us, we are going to receive, right? We are the business. Always think we are the business. If the business bank is going to pay us, we are going to receive. That's why we say it's a current asset. If you have positive. But now we have to pay to the bank means it's negative. We have to pay means it's a current liability because we are liable. We are liable to pay to the bank. Are you all clear? Guys, there is a separate chapter we will be studying in grade 10, but I just explain more than I have to explain in the first chapter, just to make sure y'all are okay with the words. But guys, believe me, you will have separate chapters to study this in the future. Okay? Now, guys, let's go to the next example. So, guys, the next example is accrued expenses. Accrued expenses is another word for accrued expense is what you call as expense payable. Expense payable, another word, accrued expense. Now, example, I took here electricity. This was prepayment, right? Prepayment. Now, I told you have to pay 12 months, each month 1,000. And they paid 40,000. Now, let's take another example, the same thing, but I'll change the paid amount. Let's say they paid only 8,000. How much they have to pay? They have to pay 12,000. They have to pay 12,000. But they have only paid, guys, they have only paid 8,000. Now tell me who have to pay whom? Are we payable or we will receive in the future? We will get the benefit or should we pay in the future? It's a payable, guys. Why? Because we have used electricity for 12 months. We have used electricity for 12 months. But we have only paid for how many months? We have only paid for 8 months. So that means, guys, we have to pay. There is a payable. We have to pay in the future another 4,000. Another 4,000 because we haven't paid. We haven't paid. So that is what you call as accrued expense or expense payable. This 4,000 is what you call as accrued expense, or we say expense payable. This is a current liability. Current liability. Why? Because you know in the future we have to pay this electricity because, guys, we have only paid 8,000 even though we had to pay 12,000. We only paid 8,000. We call it as accrued expense or expense payable. Are you all clear? Did you all understood the difference? Okay. Income received in advance. Guys, I'm not going to explain that. Okay. Income received in advance, I will explain in the future. Okay. Income received in advance, they will not test you much. Income received in advance is you have received more than you have to receive. Okay, that means, for example, okay, I will explain because some of you all might not be coming. For example, let's say you have to receive income. You have to receive income 1,000 rupees, but you receive You have to receive only 1,000, but you received how much? You received 5,000. You have received extra. So it's a liability for the business because the extra 4,000 they received as income, you should give them the service in the next year. You have a compulsory requirement to give them the service because you had to receive only 1,000. You receive 5,000. You receive 4,000 extra. That means, guys, you have received extra means in the future, you are liable to give them the service. For example, I'll take a simple example. I am teaching. My monthly fees is 1,200. One student pays me 2,400, pays me extra for 1 month. Now, as a teacher, I have a compulsory requirement. I am liable to that student to teach 1 extra month. Whatever happens, I have to teach that student 1 extra month because he paid me 1 month extra. Okay, so that's what you call as income received in advance. Guys, we'll stop it here. Before that, I'll give you all some questions so that we will see whether you all have understood today and you all can answer. What is the similarity between assets and liabilities? Quickly write the question and then send me the answer. What did you find as same when it comes to asset and liability? There was something which was same. Very good, very good. You all are giving correct answers. Okay, go to the definition of, okay, I'll show you the definition. I'll show you the definition because some of you all might be the first time learning it. So I'll show you the definition. Okay, so this is the definition of an asset and liability. Can you all tell me what is the similarity between asset and liability? Check and tell. You all know the definition. So this is the definition. Compare these two and tell me what is the similarity between asset and liability. We studied 3 components. Very good, guys. The similarity is, see, guys, compare both. This also as a result of, this was a past paper question. As a result of past transaction, even liability was as a result of past transaction. So write it down, guys. The similarity between assets and liability is both arose as a result of past transaction or event. Both came as a result of past transaction or event. Okay. Now, guys, tell me what is the difference between asset and liability? What is the difference between asset and liability? Can you all quickly tell me? Very good, guys. Think about the benefits, inflow, outflow. Think about the benefits, inflow, outflow of benefits. Guys, yes, when it comes to assets, guys, inflow of benefits. Liabilities, outflow of benefits. So that is the difference between assets and liabilities, guys. Assets will have inflow of economic benefits, but when it comes to liability, we say liabilities have outflow of economic benefits. When you make a settlement, it goes outside. Okay. Guys, don't say controlled and not controlled. No, guys, you can't differentiate like that. There's no difference like that. You can say assets have inflow, liabilities are outflow of economic benefits. Okay, so guys, we will stop it here, guys. If I am keeping another class for this chapter, I will let you all know. But sometimes I might not keep. I might just continue the private class. Okay, it depends. I will let you all know. Okay, so yeah, so guys, that's it for today. I hope you all are clear. Okay, what is inflow? Inflow means you're getting inside the business. Okay, inflow means you're getting in. If you want any information related to the fast track program, guys, you can message me to this number, guys. I will let you all know. Okay. Okay, guys, so that's it for today. Take care, study well. If you all want to know anything related to maybe A-levels, accounting or anything, you can just put me a message. I might keep free classes. I mean, first chapter free for A levels. If you're an O level student, you can still join. Okay. Okay, guys, that's it. Take care. Sorry.